The policy announcement today has been a surprise and non-consensus. Most banks on the street were expecting a 25 basis points rate cut from the RBI. This has given the huge impact on GDP because of the demonetization exercise, and also the softer inflation expected because of low demand. But actually, without sounding too cliched, I'm actually happy that the RBI chose to go with no rate cuts. The messaging is fairly clear. The RBI thinks that the slowdown in growth looks temporary, probably last for a quarter or two, and then it will start picking up again. This is also reflected in their consensus or their estimates for the GVA numbers, which is down only by 50 basis points. They seem to be more worried on the inflation side, because while inflation does seem to have come down or will come down for the next quarters, I think they are worried about inflation firming up, a kind of a bottom having been put in place. Crude oil is looking higher, so that's also a risk to inflation numbers. And more importantly, I think with the US interest rates looking to go higher, it's important that we are not caught on the wrong side of the rate cycle. So in hindsight, I'm happy that the RBI chose not to go with the market consensus on the rate cut and kept it unchanged. More importantly, RBI has also given us the 100% CRR liquidity withdrawal back. So that is being rolled back from December 10th, which means the system would be flush with about 3.25 lakh crores of liquidity. Does that mean that short-term rates will fall significantly? Probably for the first few days, yes. There could be some adjustment on the overnight rates, but eventually what will happen is we've only been seeing money being deposited into the banking system, but not enough money being withdrawn from the banking system because of the restrictions on withdrawals. But as time goes by, in the next 30 to 60 days, there will be more and more relaxations on withdrawals. People will be able to access their accounts and take the money out. That would make the system fairly liquidity neutral, or at least not as liquidity surplus as it is today. So in that sense, the RBI's focus on trying to focus on inflation and being slightly more cautious right now is prudent, and reflects the larger assessment that globally there's a lot of changes happening. We are seeing US on a reflationary path. There is a risk of US interest rates going higher. We have seen inflation kind of firming up in India. The chances of inflation going substantially lower from here looks to be less.